In a widely expected move, the U.S. Federal Reserve has left its interest rates unchanged. Releasing a statement after its latest policy meeting, the Fed said inflation is finally climbing after years of being stuck below its 2% target level. Seung-jae reports.
Wrapping up a two-day meeting, the Federal Open Market Committee held U.S. interest rates steady on Wednesday, expressing confidence that a recent rise in inflation would be sustained, putting on track to raise borrowing costs in June. The Fed's decision to leave its benchmark overnight lending rate in a target range of between 1.5% and 1.75% was unanimous. The Fed said inflation had moved close to its target, and the price stability part of its dual mandate from Congress had almost reached its 2% target. Experts say the 2% target is symmetric, meaning it would be equally problematic if inflation lingers too far above or below that level. The Fed's comments on the U.S. labor market were also of interest. It downplayed a recent slowdown in economic and job growth, saying the activity had been expanding at a moderate rate and job gains on average had been strong in recent months. Last month, the Bank of Korea left its key interest rate unchanged, deciding to hold the rate at 1.5%. U.S. interest rates are now higher than South Korea's lending rates. Prior to that, they had been on par with each other since December of last year. Back in the U.S., the Federal Reserve currently forecasts 2 more rate hikes this year, while an increasing number of policymakers see 3 as possible. All eyes turn to the Fed's next meeting in June, when rates are set to go up. Seung-jae, Arirang News.